Awesome. I was saying there are some basic Forex terms that traders use, and it's good that I get you all acquainted with these terms. Okay, so today's class, we're talking about some basic Forex terms. And as you can see here, number one that is listed is the PEEP. And the big question is, what is a what? A PEEP. What is a PEEP? Now, Forex, I'm going to define it, but listen. Forex currencies display their prices in 4 decimal points, okay? And a PEEP is a number and value in the Forex market, okay? A PEEP is the smallest price change that an exchange rate can make, okay? So let me take, for example, before I give you a full definition of what a PEEP is. Okay, let's say Naira is 470 today, and Naira shifts to 470 but 50 kobo or 3 kobo. Okay, it means that the Naira has made what? Some pips. The movement, basically movements in Forex, okay, or change in prices, in price value in Forex is called a pip. So are you ready to write? So if you're writing, you take this down. A pip is the smallest change that occurs in prices. A pip is the smallest change that occurs in prices. I repeat, a pip is the smallest change that occurs in what? Prices. Further on your note, say note. A pip like I said earlier, is the smallest change that occurred in prices. So you can just say price movements in the market. On your note, say price movement in the market are called what? Pips. Price movements in the market are called what? Pips. PIP. Sorry, I didn't put the S. You can put that there so you understand. Pips. Now, what am I trying to say? Just to explain, like I explained earlier, the Naira appreciates, from 470 to 470 with 3 kobo, okay? So it means the Naira actually made 3 pips. So sometimes someone will ask you, you're taking a trade, how many pips are you targeting? So they're asking you how many, what they're expecting from you is the exchange. Are you expecting the Naira to move from 470 to 475? How many pips do you want to make in that trade? So the smallest change that occurs in what currencies is called a pip. The smallest changes that occurs in currencies are called what? Pips. Do you understand that? Let me see your reaction on the chat box. Do you understand that? Or do I have to recap? Do you understand what a pip is? Or do I have to repeat myself? I need your reactions, please. Okay, someone says, please recap. Okay, now, recapping, I said a pip is the smallest change that occurs in what? Currencies or prices. Okay, use that word. A pip is the smallest change that occurs in what? Currencies. And I was trying to give an example that the Forex market moves in pips. In Forex trading, when they say movement, they are talking about pips. When dollar appreciates, it appreciates in pips, okay? When they are also declining, they do that in pips. So movements in the Forex market are called pips. Miriam, do you understand now? Movements in the Forex market are called pips. I repeat, Naira is 450 and it moves to 450 points, maybe 50 kobo or so. It means the Naira has appreciated in pips. So basically, movements in the Forex market are called pips. And if we do understand that, I would love to move on to the next, which is called a lot size. Okay, a lot size. Now, for definition, a lot size is the percentage a trader is willing to risk per trade. Okay, and there are three different types of lot sizes. There are three different types of what? Lot sizes. And number one lot size is a micro lot. I'm typing it on the chat box so you can see it. There are three types of lot sizes. I'm still going to explain that further. Okay, number one lot size, we say micro lots. Then we have mini lots. Then we have standard what? Lot. Now, this lot sizes helps you to determine, still on your explanation, this lot sizes helps you to determine the percentage of your capital that you are willing to risk per trade. Okay, what I'm trying to say, in Forex, there's a standard rule that for every trade that you take, do not risk more than 2 or 3% of your entire account. Okay, that's a standard rule. So what that means, if you have $100 and you're trading, for example, you're not supposed to risk more than $3 per trade. Are you getting me? So what helps you to determine this? What helps you to determine the amount you want to risk is called the what? The lot size. It's called the lot size. And I've explained to you that there are three types of lot sizes. And number one is a micro lot. Number two is the mini lot. Number three is the standard lot, which I'm going to explain further how you can use them practically. Okay. So these are the three types of lot sizes. They help you to determine a certain percentage of your capital that you are willing to risk what? Per trade. So what that means is that there's a risk-reward ratio. You are risking 2% of your account to make 3%, for example. Or you're risking 2% of your account to make 4%. Means you are risking $2 to make a profit of $4. That is 2:4 risk reward ratio. So what helps you determine that portion of your account that you want to risk is what is called the lot size. The lot size. You understand? So I hope we got that. If you understand that, please let me see your reaction on the chat box. If you understand this explanation, or if you need me to recap, just say recap.
Sorry, sir, please don't understand.
Okay, just put it on the chat box, okay, to protect the integrity of the call. Don't unmute yourself, okay? So I repeat again, a lot size helps a trader to determine the certain percentage of his account that is willing to risk per trade. You understand? Now, what I'm trying to say is that for you to be, there's a standard rule in Forex that if you're trading, if you're taking any trade, don't risk more than 2% or 3% of your entire account. So what that means is if your account is $100, for example, you are not expected to risk more than $3 for a particular trade. I repeat, if your account is $100, you are not expected to risk more than $3 for a particular trade. So what helps you determine the amount that $3 that you want to risk is the lot size. And I explained, maybe when I explain the lot size more better, you understand it. And I explained that we have 3 types of lot sizes. We have the micro lot, we have the mini lot, and we have the standard lot. Like someone can say, take a trade with 0.01. Okay, that's a lot size. Okay, and each lot size in the market, there's a certain amount it gives. Let's take, for example, 0.01 means that for every pip, you're going to make 10 cents. Are you getting me? 0.10 is another lot size. That means for every pip, you're going to make what? $1. Why 0.1 is a standard lot size, meaning that for every pip, you're going to make $10. So for example, you and I can take a trade. The same trade. I can give you and I the same signal. But now, we can't make the same profit. Why? Because our lot sizes are what? Different. Our risk-reward ratios are what? Different. Let's take, for example, you and I, you have $100 while I have $1,000. And we take a trade, risking 2% of our account. 2% of your account is $2. Why 2% of my account is $20? Do you get the point? So it means also in terms of making profit, our profits are not going to be the same. So when I explain the lot sizes, different types of lot sizes, you'll be able to understand it more better. But I hope my explanation is clear now. Please put that on the chat box if you're clear. If it's clear now, okay. Ambrose says it's clear. Okay. Felix, Miriam, Camillus, Shei, okay, awesome. Now, there are other things you'll be hearing, because these are the things you'll be hearing. How many pips have you made? What is your lot size? So someone can ask you, is the market bullish or is what? Bearish. Now, let me explain the theories behind a bullish market and a bearish market, okay? Now, there are 2 synonymous animals that are used in expressing here, which is the bull and the what? Bear. Now, have you ever seen where a bull wants to attack? Who has seen where a bull wants to attack a prey? Who has seen that? Have you ever seen where a bull is attacking a prey? Let me see your reaction. If you have ever seen that. Yeah, who has ever seen that? Now, if on TV, yes, definitely. I don't think we have bulls. In movies, yes. Now, how does the bull attack? The bull always what? Lifts up its prey. The bull will use its arm and what? Hit the prey up. So whatever the bull is attacking, he believes in taking it up. You understand? So when they say the market is bullish, it simply means that the market is what? Going up. Do you understand? When someone asks you, check Euro USD for me, is it bullish or bearish? It's a Forex term. It's a language in Forex. The person is asking you, this market, is it going up or is coming down? So when they say a bullish market, it simply means an uptrending what? Market. When they say a bullish market, you can put it in your definition. When you hear the word a bullish market, it simply means an uptrending market. Okay? So also, Have you seen where a bear is attacking? Maybe on TV, or some of you must have seen it live. So a bear attacks by pulling down the what? Prey. So when they say that the market is bearish, it simply means that the market is going what? Down. So these are these two animals that are used in expressing this form, and you will hear it a lot in Forex. Okay, is it bullish or bearish? So don't get lost. Okay, don't feel it's something too big. It's a simple question: is the market going up or is it coming down? You get? So that's what it simply means. Okay, so now there are different types of ways to measure currencies. Okay, but we're in number 5 now. I hope my explanation on bullish and bearish market was clear, or do you need a recap? My explanation on bearish, bullish market, are they clear? Are they clear? Okay, Moses says clear. Okay, clear. Okay, awesome. Bullish market means that the market is what? Going up. Why the bearish market means that the market is coming what? Down. Okay, so someone asked a question. I'm going to attend to that question. But if you see our course outline, you see that that question is a market structure, which we've not gotten there. Okay, but there are different ways to measure prices in the market. But one of the most popular ways that traders have been using over the years is called a candlestick. Okay, so a candlestick is a tool that is used to measure price what? Movement. Now, most of you must have seen something like this. Let me show you. There's a line graph, which you know, and that is why I don't want to share much light on that. There's a line graph. Most of you must have seen something like this, both in your economics in school. You see graphs going up like this. So I was trying to say that you guys must have seen something like this in your economics and whatever. This could be, this is a graph movement. Are you getting me? But on a line chart. Okay, but this is how the candlestick looks like. Still the same information, but in a different outlook. And I'll be showing you tonight, so don't be confused. You see the candlesticks, they look like this. They look like this. Okay, they are representing what? The same information. So the candlestick is a tool price movement. It's a tool that is used to measure price movement in the market. Okay, so you can put that in your notes. Now I said leverage the other time. Most of you already know what leverage is. Okay, a leverage is a soft loan that is offered by the Forex broker to enable a trader open more position. You understand? Open more what? Positions in the market. I already explained leverage for you before. Who doesn't understand leverage? I already explained it in our previous classes. Is leverage clear? Is candlestick clear? Please, if you are cleared on candlestick, let me know if you're clear. I said a candlestick is a tool that is used to measure what? Price movement. Okay, candlestick is clear. Okay, leverage is also clear. Is leverage clear? Okay, awesome, awesome. Now, hedging. Most of you, you must have heard this word, but there has not been an explanation. Now, take this in your notes. When a trader enters into a trade with the intention, I'm talking about hedging, when a trader enters into a trade with the intention of protecting against unwanted moves, when a trader enters into a trade position with the intention of protecting against unwanted moves in the foreign exchange market, is called hedging. When a trader enters a trade, you can't hear me clearly? Oh, you cannot hear me? If you can hear me, please let me know. If you can't still hear me, you let me know, because I don't want, can you guys hear me now? Oh, this is strange. This is very, very strange. Can you hear me now? Okay, I think that must have been my internet. I'm sorry. But okay, you guys can hear me now. Positive. Awesome. Thank you. I'm sorry, that must have been my internet. Okay, so I was talking about hedging. Let me repeat again. I say hedging is when a trader enters. Can you hear me? When a trader enters a trade or takes a position hello? I said hedging is when a trader enters a position with the intention of protecting against unwanted what moves in the foreign exchange market. Okay, when a trader enters a position with the intention of protecting himself against unwanted moves in the foreign exchange what market, that is called hedging. Did you hear that? Did you hear what hedging is? Hedging is when a trader enters a position with an intention of protecting himself against unwanted moves in the foreign exchange what market. Please, can you hear me? Did you hear that? I repeat again. Hedging is when a trader enters a position with the intention of protecting himself against unwanted moves in the foreign exchange what market. Did you hear that? Please give me your feedback. Let me know if you're following. And is it clear before I explain further? Now, when we talk about hedging, for example, I told you the other time that there are people who are called hedge funds what managers. Okay, there are people who hedge. Now, one of the essence of hedging is that you're protecting yourself against unwanted moves. For example, you want to pay your son's school fees by, okay, this is the year 2020 that is full of surprise. At the starting of this year, dollar was 340. Are you getting me? You wanted to pay your son's school fees in November, okay? And you had already budgeted the school fees then. The school fees is $1,000. So you have already budgeted yourself then, and you brought out 340,000, which was $1,000 in January. But today, what is the price of dollar? What is the price of dollar today? Who can tell me that on the chat box? What's the price of dollar today? Almost 490. So can 340,000 still give you $1,000? Can it give you $1,000? Let me know. No, that's the answer. It can't give you $1,000. So, but as a hedge fund manager, what hedge funds they do is that they hedge this money in the foreign exchange market. It means that even any moves that happens in the market, it still goes in their what? Favor. So in simple terms, in a layman's language, what hedging is just buying and selling at the same time. When you open a buy and a sell position the same time, it means you're what? Hedging. You're hedging the funds. It means even if dollar increases to 500 naira, any day you decide to cash it out, it's still going to be 500 naira. Is it clear now? That is just what hedging means. Protecting yourself against what? Unwanted movements in the foreign exchange what? Market. Is hedging clear? Can we move on? Is it clear or I should recap? If it's clear, let me know. I need your reactions. If it's clear, okay, okay, very clear. Moses, okay, awesome, Ambrose, awesome. So this is clear now. And we talked about spread. Now, I said spread, this is how the forex brokers make their money. Am I correct? I said it in our last class. Okay, forex brokers make their money through spread. So for example, that is the cost of you executing a what? A trade. That's the cost of you taking a trade. So I explained spread in our last classes. I hope spread is clear. Do you understand spread or do you need a recap on the word spread? Do you need a recap on spread or is spread clear? Now, these are some of the basic terms. These are some of the basic terms that you'll be hearing. Okay, little recap. Spread is the cost of carrying out a transaction. Okay, and I'm saying that this is how forex brokers make their money. They charge you spread for every trade that you take. There's a spread charge. Are you getting me? So this is how the forex brokers, who are the middleman, this is how they make their money. So that means that if you want to buy something and the price is 50 naira, they might sell it for you at 50 naira with 1 kobo or 50 naira 2 kobo. Are you getting me? That 2 kobo or 1 kobo charge is called the spread. Okay, so this is what the brokers use. That's how they used to make their money. They make their money based on what? On spreads. I explained that earlier. Is it clear now? David, is it clear? Is it clear? Everyone, are we on the same page? Okay, awesome. Now, you'll be hearing another word, which is called the MT4, which it was explained last week, but today I'm going to be taking you on an intro to the MT4. Okay, so now this is how the MT4 works. The MT4 means MetaTrader 4. I'm writing it in the chat box so you can see it, MetaTrader 4. And the MetaTrader 4 is the globally accepted application that is used in trading the financial market. Okay, this is the application that is used in trading the world financial market. And we're going to see it for the first time and see how it looks like. Okay, so I'll just stop sharing this so I can go to my MT4. Let me stop share and give you guys a new share. Okay. So I also downloaded the MT4 just like each and every one of you, and I wanted to show you how the MT4 works. And this is just it coming. Okay. So basically, I'm trying to pull out the MT4. Like I said, this is the global application that is used in trading the Forex market. Can you see my screen? If you can see my screen, let me see a yes or a no. If you can see my screen, let me see your reaction. If you can see my screen. Oh, now I know why my network was unstable. I think it's raining a bit. Okay, so we're going to be fast because we know the condition. Once it rains, the network becomes really, really bad. Okay, so now this is how the MT4 looks like. Have you seen your own like this? Have you seen your own MT4 like this? Because I want to show you how to set it up. When you open up your MT4 for the very first time, this is how it looks like with a lot of information. Let me just restore everything. Okay, this is how your MT4 basically looks like when you open it up, okay, for the very first time. Now, I'm going to be showing you how to set up your chart to look neat like mine is. This is how your chart will be looking as a first-time user, okay? But as a professional, once you set up your chart, this is how it should be looking, okay? Let me remove this stuff so you see it very well. This is how your chart should be looking as a professional trader. Okay, so some of you might like black background, some of you might like white background, some of you might like blue background, whatever color you want to choose. But your chart needs to be very, very neat because my strategy does not allow your Forex chart to look like this. Okay, rather my strategy allows your Forex chart to look like this. Okay, so what am I going to be teaching you right now? How to set up your what? MT4. How to set up your MT4. Like I was saying in the Forex terms, you can see this. These are the candlesticks. Okay, these are the candlesticks. Are you able to see my mouse? These are the candlesticks. Or let me pick a writing tool. These are all the candlesticks. You can see them. Okay, these are candlesticks. It's going up, it's coming down, it's going up, it's coming down. So what is used to measure all these movements is the candlestick. Okay, we'll be talking about it more, but this is how the candlestick looks like. And if you see it, it looks like a candle. Am I correct? It looks like a candle. So this is what is used to what? Measure what? Price movements in the foreign exchange what? Market. But today I want to teach you how to set up your MT4 to make it look what? Neat. All you need to do once you open up your chart, and let me minimize this. Hold on, guys. Once you open up your chart and it's looking like this, for example, once you open up your chart and it's looking like this, all you need to do is what? Select any one, okay? And this is how to build your what? Trading template, how to arrange your chart and you save it. So whenever you come to the market, you can have your chart looking clean and good. Seems to have a message on the chat box. Yes, it's not the same with the mobile own. That is why I advised everybody to what, if possible, you can get your laptop. Maybe on the mobile one, I can still do another training to show you how to set it up so it looks neat too, just like the one on the laptop. Okay, but all you need to do is to what? Right click at the center of the chart. And you're going to see this icon that says properties. Can you see it? Are you following? Can you see properties? Can you see properties, guys? Do I have a yes? Yeah, you see the icon that says properties. Awesome. So you click on properties, it brings you to what? Colors. It brings you to colors. Right now, you can see that the background color is black. But I love my background color to be white. So I click on background and I choose what? White. I expect you to be doing this if you can. If you can, please do. We're going into the practical session. So my background color has been changed to what? White. Now, when they say foreground are these lines that are around it, okay? So class rep, are you in the house? Take a screenshot when I fully set these colors. Take a screenshot so everybody can arrange theirs the same way. And the assignment is, once you're able to arrange your chart properly, send me a screenshot on the chat box so I can see. That's the assignment for tonight. So my background, I choose what? White. But my foreground, I choose what? Black. Grid are these lines. You see these lines that are inside the chart that looks like check? They are called grid. And I don't usually like grid on my chart, so I just say none. Okay, and you can see everything that I'm arranging is reflecting here. Whatsoever I'm doing right now is reflecting here. Okay, so I don't want grid. Then bar up is telling me the bars that are going up, the candles that are going up, what color do I want them to be? I want them to be what? Green. So I just say what? Green. Bar down, the candles that are going down, what color do I want them to be? I want them to be what? Red. Okay. My bullish candle, what color do I want it to be? I want it to be what? Green. I want my bullish candle to be green. You can see it's reflecting on this small screen here. And my bearish candle, who doesn't know what a bullish candle is or a bearish candle? It simply means candles that are going up. I said bullish market going up. You can already see here, bull candle, candles that are going up, bear candles, candles that are coming down. Okay. My line graph, I want it to be what? Black. Okay. Why on my volumes, I still want my volumes to be what? Black. My axe and bid line and stop levels, axe line and stop levels, I want them to be red. Now, once I finish setting all this up and I click on OK, my chart is going to change. My chart is going to change. Guys, can you now see the difference? So the chart has changed from what it was before to what I've set up right now. So does it look more clean now? Does it look clean now? And does it make sense now? Does it look clean now? And does it make sense? So this is how to set up your charts in the Forex market. So you all know when you see green candles going up, you know that the market is going up. Red candles coming down, the market is going down. So I want you all to set up your chart to look like this, okay? Or whatever color you prefer, whatever colors that you may like, okay? But for me, these are some of my favorites. This is how I love to arrange my chart. Now also, you can see there are lines. I'm going to teach you how to use some of these tools. There are lines. There are what? Rectangular boxes. There are this is a vertical line. Yeah, this is a vertical line, while this is a horizontal what line. So these are some of the tools you can be using to do analysis. You can see them, they are all here. And while we're going through the training, I'll help you understand them more better. But on the chart setup, is it clear? Is it clear, or I should do it again? Okay, your candlesticks are very tiny. For you to see them at a bigger level, all you need to do is to zoom in. This is where you zoom in. You see a plus sign. You see a plus sign and you see a minus sign at the top. Are you using a laptop? Judicious, are you using a laptop? You see a plus sign and a negative sign at the top. Yes, if you're using a laptop, if you zoom in, you see your candlesticks, they will be bigger. You can see how big mine is. That's because I zoomed in. Also, if I zoom out, they will be small, like this. So that is how to, do you understand now? Are you seeing where I'm clicking? Let me show you again. This is where I'm clicking. Look at it at the top. I'm showing a spotlight there. Do you have it on your chart? Okay. Okay, awesome. So I can see you're following. So that's how to make your candlesticks look big and to make them what? Look small. So there are so many tools here. There are so many tools here in the MT4 that you can use for your trading. Now, let me start talking about these tools one after the what? The other. Let me see how I can. Now, can you see the red torchlight I'm showing? Can you see the red torchlight I'm showing? I need your feedback. I told you we'll be getting more technical here, but don't be scared. Everything that is here is simple. They are simple to the core. Now, also, before I forget, if you have set up your template, you need to save it. If you've set up your chart to look like this, you need to what? Save it. And how do you save it? That's what I want to show you. How do you save it? After setting up your template, you must save it, because if you don't save it, if you come back to the Forex market, your chart will still be looking like the way it was before. So for you to save it, still right click at the center of your chart. You right click and you're going to see what? Templates. Can you see templates? So once you see this template, you will see save template. Are you following? How to save your template. We've built a template of changing our candles to green and red. So how do you save the template? You right click at the middle of your chart and you go to template and you see what? Save template. So you click on save template. Save it to whatever name you can remember. Okay. For me, I'm going to choose price action. Okay, I'm going to choose price action and I will say what? Save. So I'll show you when you open another chart and it's not organized, there's no need for you to be doing it all over and over again. You just go to your template and put it on your chart and you start what? Doing your analysis. Okay, so you've saved your what? Template. Now there are various tools here you can use for your trading. You can see the first here shows you, it's called the market watch. It shows you some various currencies. For example, you can decide to click on AUD USD. So once you click on it and open it, your chart is going to look like this. But we already have a template. Am I right? We already have a template. So all I need to do is still right click on my what? Chart, and you see template. Once you see template, you see the one you've saved. You see price action. And once I select price action, see what has happened to the chart. Okay, the same setting has been replicated here. Do you understand what just happened? I saved my template and I opened a new currency pair and I put in my template, and the candlesticks are now the way I want them to be and the colors are the same way. So there's no way for you to be doing it all over again. So you just save your template. Whenever you want to use it, you can just impute your template. Is it clear? Awesome. So I'm going to move on. I told you we'll be getting more technical these days, so be open-minded. But there are very, very, very simple ways that you can use to trade the Forex market. So I showed you this is the market watch. This is also somewhere you can see your profiles and files you've saved. This is the You see, this platform here, you can decide to put it on the market watch section. You can decide to put it on. And what this means is you can put all your currency pairs here, whichever you want. You just double click on them, and they will be shown. You double click on them and they will be shown in what? In your chart. Okay, so I will show you how to use them as we progress. You can see your data windows showing you date and time, high and lows for AUD, USD. That's the data window. If you want to close it, you just see the sign there. You can close it and it goes off. Okay. You can also see navigator is here, which shows you your account, indicator, expert advisors, or scripts you might have. Okay, you can see the terminal. The terminal is this aspect of the chart that shows you the trades that you are currently on. You can see I'm on a trade. So the terminal is showing me what my trade is doing right now. My trade is currently minus $3. Okay, once it's in profit, it's also going to show on the terminal section. It's going to show on the terminal section. So you can pull that out. You can decide to leave it on your chart. You can decide not to. Okay, you can see also strategy tester. That's for robots and the rest. You can see how to place a new order on any currency pair. This is how to place a new order on any currency pair. You just click on new order and you can decide to take a trade. You can see stop loss and take profit. Yeah, I need to speak to you about stop loss and take profit, but that will be on the next class. Okay. But you can see all these tools. There are so many here that you can use for somewhere. I know you have questions. You ask your question. You can see the tools at the top. Once you put your mouse, it will show you what it is. Like you can see this is saying bar chart. If I click on it, it removes my candlestick and gives me a bar chart. And the next icon here is candlestick. Once I click on it, it returns my chart back to candlesticks. You can see the next bar here, which is line chart. If I click on it, it returns my chart to a line chart. Okay, but I told you the candlestick is the most popular. That's this. You can see zoom in, how to zoom. You can see how to zoom out. Now this point here helps you to, let me see what's going on the chat box. My video is not working. Everything is showing fine on my end. Please check your network. Kindly check. You guys are not still seeing my video. It's hanging. Okay, anyway, it's raining. It's seriously raining out here, like I said earlier. It's raining. Say my video is paused. Oh, there is a lag. It is paused. Anyways, is the rains, is the network. Not really. On my end, it's showing that everything is good, but I'm going to send in the recording. So I'll soon be ending in the next 5 minutes, so the recording will not be too long. But I just hope that the recording will not have any lag or hanging, okay? But so far, so good. What I've been able to achieve today is to talk to you about some basic Forex terms. But can you hear me? Can you all hear me? Okay, you can hear me. So I'll send the recording to the group. Okay, before then, let me take these two questions from these persons. Okay, Samuel, can you kindly unmute yourself and ask your question? Samuel, please kindly unmute yourself and ask your question. Let me hear you, Samuel. You raised up your hands. Okay, if someone is not available, Kingsley, I can see your hands are up. Do you have any question? Go ahead.
Okay. Thank you, sir. So I wanted to confirm this MetaTrader 4 we are using here is the same. Everything is working perfectly well with the Primus Meta Primer 4. I want to confirm every facility that is here is in that one, because
Yes,
that is the
I
one you say you'll be
downloaded this.
trading with.
I downloaded this from the same way we did the download the other day. That's when I downloaded it. So everything is the same. Are you getting me?
Oh,
So I just
yes,
showed you
sir.
how to set it up to look like this.
Okay, sir. Okay, sir. Thank you.
So yeah, I told someone to take a screenshot of the label. I asked the class rep to do that, so you can see how I labeled mine, so you can also do yours. Now these tools, you have to play with them tonight. If you have the MT4, you have to play with them. These are tools that you use in trading. For example, I was up there. I was showing you how to zoom in. This is how to zoom out. If you want to be seeing 4 charts, 5 charts at the same time, this is the window for that. Okay. So also, if you want to, there is a lot. We can't finish all in one day. We can't just finish all in one day. So, but we'll continue as I'm training you, you'll be seeing how I'm playing with these tools. You'll be seeing how I'm using them to do my market analysis, and I expect you to do the same. Remember, the goal for you is to take your first trade before the end of this training, and things are about to get real. We're now looking at the market. Someday, we're going to be doing like a more detailed training on it. So far, so good. I would love to take questions in regards to some basic Forex terms that I taught, and also the MT4. So it's time for you to ask your question. Okay. Any question? Okay, so Camillus, please unmute yourself and ask your question. But right now, I'm going to stop recording so that, please define, I said I will teach you about standard lot. Okay, I'll teach you more about lot sizes. I don't want to compound. See, I break down my trainings in such a way that it will be easy. If I start teaching you the different types of lot sizes, you might forget other things that I've said, but I will teach it. It's a topic on its own. I'm going to teach you that. Okay. Kingsley, you have a question. Can we ask in the chat box? Yes, you can ask your question in the chat box and I will answer. Camillus, don't go ahead. Just take lot size, forget standard lot. Okay, it has no definition, but I'm going to show you what a standard lot means. The number that you can say is a standard lot, the number that you can say is a micro lot, and the number that you can say is a mini lot. So I'll teach you all that. So who has a question? Sir, do we have these features
Hello,
in
sir.
empty?
Hello, sir.
Yeah, go ahead. Who is that? Who is on the line? Your name?
It's Kingsley Wafo.
Okay.
Kingsley, I can see Primus Africa Live 3 on your own, but my own is just Primus Africa Live.